Hello everyone, welcome you all on our YouTube channel Sage Financial Academy. In today's video, we are going to discuss about a very critical topic related to trade finance and foreign exchange. Today's topic is Interest Equalization Scheme. Hope you guys are aware about Interest Equalization Scheme. If you are not aware, don't worry. In today's video, we are going to discuss each and everything related to Interest Equalization Scheme. So let's start today's topic, Interest Equalization Scheme. So friends, Interest Equalization Scheme was introduced by the Government of India with great purpose, with great future, because Government of India wants to promote exporter who are taking export finance in Indian rupees. Means if you are exporter and you are taking export finance, means you are taking loan against your export order in Indian rupees, and if you are paying more interest to banks, then here government is there to support you, to make you competitive in international market. For example, if any entity who is taking export finance in foreign currency and they are taking loan at a cheaper premium, so here to make you competitive, what government is doing? Government will give subvention from their own pocket, so that the additional interest you are paying to bank, that additional interest government will reimburse to you. So that is all about Interest Equalization Scheme. So first of all, let's talk about the introduction of Interest Equalization Scheme. Interest Equalization Scheme, basically it was introduced by the Government of India for pre and post shipment on 2015 1st April. On 1st April 2015, Government of India has announced to give benefit to exporter who are taking export finance in Indian rupees. So Ministry of Commerce is taking care, Department of Ministry of Commerce and Industry is taking care, and they are funding to RBI. So basically RBI is getting fund from Government of India to pay the bank who are disbursing to their customer, and ultimately customer will get refund from their own bank. RBI is the main institution who is governing the Interest Equalization Scheme. So all the operation instructions related to interest equalization is governed by the Reserve Bank of India. So here we will take the example. With example, you will be able to understand how Interest Equalization Scheme works and what exactly purpose and what is the benefit of Interest Equalization Scheme. So let's understand with the example. Here, to understand Interest Equalization Scheme, we will divide it in two parts to understand the Interest Equalization Scheme's purpose and benefit. So we will take the first with the party who is taking export finance in Indian rupees, and another export finance party who is taking export finance in US dollar. So first of all, we will take the example of US dollar. What happens if you go for the foreign currency loan against export finance? So first of all, your bank, if you submit the request for export finance, so first of all what they will do, they will take quotation from the foreign bank. For example, if the foreign bank is taking ARR, average reference rate, or any interbank rate from foreign currency for USD, which is governed by SOFR, okay, and if you are aware, the foreign currency loans are cheaper. For example, if ARR is now running at 5% and additional above than 5%, bank is taking their commission and other charge of 2%. So now the effective price of interest will come to 7% if any exporter is taking loan in foreign currency, for example USD. Here USD or any institution taking loan, so what they will go for, they will take the SOFR as a benchmark, and SOFR will refer their ARR, average reference rate, or IBR, interbank rate. And if you are taking the example of ARR, and now ARR interest rate is 5% and bank is taking charge. So here what is ARR and IBR? IBR or ARR means the average reference rate or average interest rate if any bank is taking loan from other institution. So that is the cost of the loan. Okay, the bank, if institution is borrowing loan from the other institution, that 5% is their actual cost, and on that bank will charge their own commission and cost, and that will come to effective 7%. Here customer will pay 7% of interest on their export finance. Okay, if you talk about the Indian rupees, so how it will work? It will governed by the repo. Repo means standard rate governed by the RBI. If RBI is giving the loan to any Indian institution or any Indian bank, so RBI will charge the rate that is called the repo rate. For example, here if repo rate is 6.5 to 7%, we are taking example only, means Indian rupees loan are costlier than the foreign currency loan. So here bank's cost is 7%, and above that they are taking another 2% of their cost and commission. So it will come effective to 9%. So if any customer who is taking loan in Indian rupees, any exporter, any customer means any exporter who is taking finance in Indian rupees, so they are going to pay 9% of rate of interest, where that customer, if they take the loan from foreign currency, they will pay the only 7%. So what will happen? 9% minus 7%, and that will come to 2%, means additional 2% who is paying? That exporter who is taking loan in Indian rupees. So what is interest equalization scheme here? So here Government of India, okay, Government of India is making reimbursement of additional 2% whose customer is exporter who is availing Indian rupees export finance. So here customer who is paying additional 2% of rate of interest to bank, so government here is reimbursing that additional 2% of interest to customer, so that that customer will become competitive in international market. Hope with this example you are able to understand how interest equalization scheme works, how these benefits make the exporter more competitive in international market. So now we will read about the what is IES. Hope with example you are able to understand. Now we will read IES. Interest equalization scheme is the interest subsidy. So we discussed interest subsidy provided to exporter on their availed export finances to make them competitive in international market. So whatever the additional interest they are paying, so government will reimburse that additional interest to exporter who is taking finance in Indian rupees. Okay, and subvention is provided on interest from date of disbursement of loan up to the repayment of loan. Means for whatever period you have taken loan, export finance means export finance loan you have taken, for that period whatever the interest, whatever the additional interest you have paid, government will reimburse that interest. Okay, so here foreign currency loans are cheaper than the Indian rupees loan, so government provides subsidy of additional interest paid by the exporter in rupee finance. So here we have discussed that, and as per interest equalization scheme, government reimburse the interest of 2% and 3% as per the eligibility of exporter. Means there are two brackets. In one bracket government is reimbursing 2% of interest, okay, and another scheme where government is reimbursing 3% of interest to exporter who is taking export finance in Indian rupees. So here we will discuss on this as well. So in interest equalization scheme, which one is the governing body? So here RBI is the governing body on behalf of government. Okay, on behalf of government, RBI is running and managing interest equalization scheme. So RBI is the implementation and governing body behalf of Ministry of Commerce and Industry, and AD Bank reimburse and report to RBI for interest reimbursement made during the month to exporter. Means on behalf of RBI, your bank, what they will do? They will reimburse that interest part to you as exporter. If you are doing business as exporter, they will reimburse that interest to exporter, and that interest they will report to RBI as well, and RBI will refund that interest to bank. Okay, understood? So now we will discuss about the eligibility, means what kind of exporters are eligible to get interest equalization scheme benefit. So first of all, to know the eligibility, there are, as we have discussed, there are two condition of rate of interest. First one is 2% and another one is 3% as per the eligibility of exporter. Okay, here 2% for manufacturers and merchant exporter exporting under specified goods under 410 HS lines, means the customer who are getting 2% of reimbursement, that should fall under 410% of HS line. HS line means harmonized system code, HS code. Basically it is called harmonized system code. That means every goods have their unique number, and that number refers the HS code. If you are manufacturing any goods, if variety comes to under 410 types of goods, then you are eligible to get benefits under interest equalization scheme. And what about the 3%? 3%, so any 3% to the MSME manufacturer exporting under any HS line. Means if you are a MSME exporter, you don't need to fall only 410 HS line, means you are eligible to get 3%, and there is no cap of any fixed HS good. Means any goods if you are procuring, if you are manufacturing, you are eligible to get 3% of subvention from RBI, and you can request to your bank to reimburse that if you have a certain documentation and registration. We will also discuss about that. So if you are exporter or any person who is learning how to get interest equalization scheme, so after watching this video, you will be able to understand how to get reimbursement for interest against interest equalization scheme. So this scheme covers mostly labor intensive and employment generating sectors. So focus of the government is to manufacturing unit who are generating employment, okay, like processed agriculture, food item, handicrafts, handmade carpets including silk, handloom products, jute, raw material, yarn and other jute manufacture, ready-made garments, etc. There are multiple sectors, 410 for the normal other than SME, and for SME there is no certain goods fixed. Basically focus of government is to generate more and more employment. Okay, if you have a certain eligibility and if you feel you are eligible to get benefit under interest equalization scheme, so you must know about the process. What is the process of registration or applying interest equalization scheme? So first of all, applying you need to refer the DGFT site. You need to visit to DGFT site, and this is the URL. Okay, and that registration for unique IC identification number, which is called UIN. First you need to visit the DGFT site and you need to register your entity on that site, and that is called the UIN, means unique IC identification number. That is must. If you want to avail that benefit, you must register yourself on DGFT site, and after login into DGFT site, service option, please select the service option and then interest equalization scheme. So after login that site, go to the DGFT site and select the service option and go to the interest equalization scheme, and after selecting that, fill the details, whatever details is required, and submit the documents which is being asked by the DGFT site. And for that you need to pay the 200 rupees online application fees. You must pay the fee as well to register and apply for the unique IC number. After registering and paying, you will get the unique identification number. Post registration, you will get the detail on your mobile number via SMS or via email to your email ID. What is the last process? You need to submit UIN number to your bank, and not only the UIN number, you need to produce the auditor certificate as well, that whatever the product you are producing, whatever the manufacturing unit, they will certify you, and along with the auditor certificate you need to submit the UIN to their bank for their updation. Once your bank will update these details in their records, you will be eligible to get benefit and get reimbursement. So next coming months, reimbursement will directly come to your account, and you may check with your bank as well. So with this video, you are able to understand what is interest equalization scheme, how it works, what is the process, and what is the eligibility, and how you can register yourself to get UIN number. If you are getting confused about the process, no worry, we will again read this to make you more confident. So first of all, what is the requirement? You exporter must be eligible. If you are eligible, if you are exporter and if you are eligible, so take certificate from the auditor. The first point is eligibility. Second point is take certificate from the auditor about their industry and manufacturing goods. Okay. Third one is, what is the process? Go and get registered your entity on DGFT site to get UIN number. Okay. And then what is the process? Go and submit the details to your bank to update these details in their records. So once the updation will be done, your bank will finance. Okay. The next process is that what is, bank will start finance, and once bank will finance, bank will charge the interest, and additional interest they will reimburse to you, and once post reimbursement, bank will claim with RBI. So this is the process with 7 stages. You can understand the process flow of the interest equalization scheme. Hope with this video you are able to understand each and everything related to interest equalization scheme. If this video is helping you to understand foreign exchange, please like this video and subscribe this channel, and also share with your colleagues and friends, and do not forget to comment as well. Thank you everyone.